Rates are unchanged.
But something had changed. With the economy rapidly losing steam, the Reserve Bank has openly and strongly canvassed the possibility that its 6-year tightening of monetary policy is over.
They're certainly making it pretty clear that it is very possible that they can cut as early as within a month.
The punchline came in the last sentence of the statement issued this afternoon by Reserve Bank Governor Glenn Stevens. With demand slowing, the board's view is that scope to move towards a less restrictive stance of monetary policy in the period ahead is increasing.
The credit crisis has continued to persist and therefore it has tightened financial conditions and likely further than what the RBA anticipated. On top of that, recent activity data has continued to print quite weakly.
The Reserve Bank began raising interest rates in May 2002 after the official cash rate was cut to 4.25% in the economic turmoil which followed the September 11 attacks. The last of 12 0.25% increases was in March this year. The RBA statement has financial markets fully pricing in a rate cut at the next board meeting in September, even though inflation is still running at an annual rate of 4.5%.
So they're taking the view that the weak demand will look after the inflation problems.
The Reserve Bank's change of stance on monetary policy coincides with 3 new pieces of data highlighting the slowing in the Australian economy. Among them, a survey by the Commonwealth Bank and the Australian Chamber of Commerce and Industry showing business confidence at its lowest level in 14 years.
The survey shows quite starkly that the impact of slowing domestic demand is starting to take its toll on Australian business.
A point the Reserve Bank showed today it clearly understands, and Greg Evans believes the quicker it cuts rates, the better.
We think an adjustment of something like 0.25% in the first instance, that may well be followed over the next 12 months, further reductions, but we don't think that's enough to indeed overstimulate the economy.
How far and how quickly it's planning to reduce interest rates may become clearer next Monday when Glenn Stevens delivers his semi-annual statement on monetary policy.